So, welcome back to the channel. I wanted to talk about a stock that's near and dear to my heart today, and that would be Palantir. I do not currently own Palantir, but I have been following this company for a very, very long time. I've been following Palantir since probably 2012, maybe 2011. I thought their business model was great. It's very in line with what I do. I am a data scientist. I think that Palantir is a fantastic company. They've got a fantastic product, and I was very intrigued with the fact that they were dealing with the U.S. government and its military efforts, and the secretness that comes along with that was very intriguing. So when it went public, I was pretty darn excited, and I said, as soon as I get an opportunity that makes sense, I am going to buy into Palantir. I think that they've got a fantastic product. They're pushing it out across multiple industries, and they're gathering clients like crazy. So I was very, very excited to see Palantir go public. However, like most things that go IPO, it was overpriced. And that makes sense, right? Sell stock when it's overpriced, which is what an IPO is, right? So I don't blame them for coming in with a valuation that was red hot and didn't make sense. I think that's just the way that IPOs and those sort of things happen, right? They're usually pretty hypey, and they come out of the gate red hot. So I said, okay, I'll wait a couple of months to see what happens with the stock, and it shot up, and that kind of made me scratch my head a little bit, and I go, what's going on here? It doesn't make sense. We were in a pretty decent bubble. So I started, sitting around waiting for the valuation to make more sense. So let's dive into that for a second, because Palantir is kind of an interesting one. Palantir is not profitable on a GAAP basis, a GAAP accounting standards basis, right? They don't turn a profit, which is fine, right? Peter Thiel, he famously does not like taxes. Who can blame him? And he does anything that he can to push the company into a GAAP position of being unprofitable so that he can avoid paying taxes on the profits of the company, which is kind of smart. And so when you look at Palantir and you look at it and it looks unprofitable, you go, eesh. And then you take a look at how much cash it's actually generating, its operating costs, blah, blah, blah. So when you take a look at Palantir from a free cash flow perspective, it's actually generating cash, which is a very good thing, right? So Palantir is kind of an interesting stock from that perspective, because you've got more cash. You've got cash flow, free cash flow coming in, and a negative profit, which can help in situations where you've got turned bearish, right? Because people will look at it and go, geez, this company is not profitable, we're out of here, right? But it's free cash flow per share that we like to look at. Free cash flow per share is the right way to look at any company, really. And Palantir is no different. They have a positive free cash flow. It turns out that their free cash flow per share is about $321 million. Well, not per share. Sorry, that's 300. That would be amazing. It's $321 million in free cash flow per year. They have about 2 billion shares outstanding, which gives you a free cash flow per share of approximately 15.8 cents, which isn't a lot. However, Palantir is growing like a weed. Our good friends on Wall Street, those Wall Street analysts, they've come through and they've given us a projection on what they think Palantir is going to grow at. And they are saying that Palantir is going to grow at a rate of 35% per year for at least the next 5 years. We're going to use that for a second. All right. So remember my personal models, they go through and I try to use a 15% rate of a required rate of return. That's just my personal required rate of return for the stock market. And at 35% growth, that implies a stock price of $8.94 a share, which is pretty darn close to where Palantir is trading. I believe today, when I last looked, it was trading at $9.30 a share. Yeah, right. So Palantir looks like it's probably fair valued, at fair in quotes, right? You might be able to get a 15% return out of this thing, which is pretty amazing, right? When I say fair value, it's really an unfair value. You're getting a 15% rate of return. So that's not bad. That's not horrible at all. There's not a lot of margin of safety there. And I have two things that I want to say about margin of safety here. One is 35% growth per year is incredibly aggressive. I'm not sure that they can keep up that pace, and so I'm going to want to pull that back a little bit. Being in the industry myself, the last 10 years or so have been really hyped up, and I think it's coming back down to reality recently. I think that we're probably going to see in the industry that Palantir operates in grow a little bit slower than it has over the past couple of years, over the past decade. I think that there's still going to be plenty of spending here. I just think there's going to be a pullback on that growth rate. I don't think that the overall economy is going to cooperate with Palantir to achieve that 35% growth rate. I think that a more realistic growth rate is going to be something more along the lines of 25%. That I'm just pulling that out of what I think is actually possible, right? Take that for what it's worth. So, assuming a 25% growth rate with a 15% discount rate, and then applying the same sort of model, it turns out that you're really looking at something closer to $4.75 as being a, quote, fair value, unquote. So the question then becomes, is Palantir a buy or not? That's really up to you to decide, right? I think that anywhere between $4.75 and essentially its current price is probably in the realm of fair value because there's a lot of uncertainty around Palantir at the moment, which fine. Me personally, I want to buy Palantir at a price of approximately, I'm going to throw this number out, about $3.50. Where did I come from with that? Well, I'm taking my 25% growth rate, which, let's be honest, that is still a very bullish growth rate, right? We're talking about going from, at a 35% growth rate, you're talking about doubling every other year, right? You're going to double every other year, right? That is crazy fast. At a 25% growth rate, you're talking about doubling every third year. So you're going from doubling every 2 years to doubling every 3 years on my case. That is still very, very, very bullish, right? We're talking doubling every 3 years. Very bullish. Very, 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 very insanely bullish on that sort of company. Now, adding that back in with the 25% growth rate, you get, $4.75 a share, which we haven't really come down to. We've gotten as low as $6.50 a share, which is still really good. It could actually be a good value at $6.50 a share. Don't get me wrong. It could actually be a good value at $9 a share. It just depends on what your personal assumptions are and what you think that the company is going to do over the next several years, blah, 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 and how much of a return you're actually looking to get. It could be a very, very good value right now. Don't get me wrong on that. You might want to buy at the price today depending on your valuation. My valuation comes out to be about $4.75. I also look for a margin of safety around that. We'll go with a 25% margin of safety on that $4.75, which means that I would be a buyer of Palantir at $3.50 a share. Could you imagine going from whatever their high price was? I think that I have that up. Let's take a look really quick. Just pulling it up on Yahoo Finance. Palantir, and their 52-week high was just a hair under $30 a share, right? Could you imagine going, that's a 90% loss, right? Just about. I'm not doing the math right now, but roughly speaking, you're talking about going 90% loss from its all-time high and buying at that low. I think that it would be a fantastic value at $3.50. Would I buy there? Absolutely. I basically, if it goes under $5 a share, that's when I would be looking to purchase personally. I'd probably wait because there is a lot of uncertainty with Palantir to start buying until it was getting closer to the $4 range. I think that that's a good value for this company. But let me go back. Let's take a step back. Let's talk about where we're at right now, right? Because let's talk about today's valuation and what that implies for the kinds of returns that you're hoping to get, right? So if you bought Palantir today, assuming a 25% growth rate, right? Take that for what it is. If that's too aggressive for you, or if it's not aggressive enough, whatever, a 25% growth rate, remember, is doubling every 3 years, roughly. If you take that sort of a growth rate, today's price represents about an 11.5% return on your investment, right? 11.5% is nothing to sneeze at, right? But that doesn't include any sort of margin of safety, right? Would you get 11.5%? No. Yeah, I wouldn't feel comfortable guaranteeing you an 11.5% rate of return on Palantir at today's price. In order to get that, right? To get that, you'd probably need to be as low as $6.44 a share, frankly. That would give you a sufficient margin of safety in order to get that sort of return. So, today's prices would imply 9% return, and $6.50 a share. Basically, its all-time low would get you the 11.5% at 25% growth rate. So the question here is, do you buy for a 9% rate of return? Again, not too shabby, but I'm hunting for bigger returns, right? If I'm going to go through all of this trouble of looking at stocks and all that sort of stuff, I want a better return than what I could get just by buying into an index fund. Are there guarantees? No, of course not. But I'm looking for a better return there. And so, even though Palantir is an amazing company, they're growing like a weed, they're doing fantastic things, I just don't see the case. Now, if you assume that they're going to do their 35% that analysts are expecting, these prices are great. They're a fantastic value. You should honestly think about buying it at today's prices if you think that 35% is achievable. But that's the thing, right? Is that when you're doing these valuations, do be conservative. The more conservative you are, the better the odds that you're going to get the return that you're looking for. So for me, I wasn't quite a buyer at $6.50 a share. Again, I'm probably more of a buyer at $4. Next year, the new numbers are going to come out for Palantir, and we're going to have a better idea of how much money is this company worth. It could have grown, right? And that's what we'd hope for with these companies, is that they would grow. But it's not a good buy at the moment. I'm not there yet. And I think there's still a little bit of economic news that might come out that would cause these things to start crashing a little bit more, and things that we could do. It's kind of in a hazy place, but I think that you can do better than buying at today's prices, and so I'm waiting. Anyway, that's my valuation for Palantir. Stay rational out there, folks.